Yeah, good evening. I am veerappan. So I'm from Black Candle Investments. Us as a firm registered in Dubai, and we are into crypto fully as an investment firm. So today our topic is on crypto investments and trading. So I'll be dealing with both investments and as a trading segment for in cryptos. So I can be reached easily on Twitter as Anbu, and my Telegram channel is on Anbu Trading. So that is how I work for, almost from 2017. I've been running this. And mainly our charts, we go by charts in trading, and I use our own proprietary trading platforms called tradingcandle.com for charts. So this is specifically an Ask Me Anything session, so that in between, on the go, so while we talk, converse, if you have any questions, you can ask anytime, interrupt, and we can go from there. So basically, DJ was asking me to do the presentation on crypto as such, so that people can do their own research. So how to go about, how to know things, how to get into cryptos as such. So last year I was here on the same platform, introducing cryptos. Basically, what is crypto, what is money, what is Bitcoin is about, how it all started, how it evolved over the period, and how it is going through, and what about regulations, adaptations by people all over the world. So those historical perspective was discussed last year, but as of now, we are dealing straight into the trading part of cryptocurrencies. So we'll be basically going one by one. What are the alternative investments within crypto space? Like not only crypto trading in spot or futures, there are other instruments which we'll be seeing one by one. So this do your own research is the most important criteria. So whatever you hear, listen, know things, you have to do your own research because it's an evolving field, cryptocurrencies. And most of the happenings happening in the crypto space is all new, day by day. Even now, as of we speak, US has asked to analyze the cryptos to adopt it. So something like this, it's a major breaking news. So it's a day-to-day happening in crypto space. So you have to do your own research when you venture into like cryptos or alternative investments, whatever it's available in crypto space. So basically, before we start, one should know what is the similarities, differences between stock market and crypto market. So stock market and crypto, basically, it's a fixed time market in stocks. So you have your own opening and closing market time, Monday to Friday. But in crypto, it's not like that. So it is 24/7, day and night, all week, all month, and all year. So throughout the year, it will be trading. So you have that freedom. Whenever you like, you can make an entry, and whenever you want to make an exit, you can come out. So there is no gaps. But in stock market, you can find gaps like gap up, gap down, day to day. The next day, it will be different scenario. The day after that, it will be different. But in crypto, it's continuous process. So it happens even while we speak, trading is happening. So it's round the clock. So anytime you can make an entry, anytime you can make an exit. That's the flexibility and the freedom you have in crypto. That's a major plus in being in crypto. The second one is like if you are in futures, there is a concept called expiry in stocks. But in crypto, there is alternate to that. That's called perpetual contracts. That means literally you don't have expiry date as such, like every Thursday, every month, every week, nothing like that. So the futures is continuous. You can get into futures like in spot. We're using the leverage so that you get maximized returns in crypto futures. You don't have to put yourself into pressure and time pressure in the name of expiry. So there is no such thing called expiry. So that is the most freedom part being in crypto. And the major other thing is, even though now it's happening in stocks like US stocks, you can buy in fractions in cryptos. You don't have to buy in full, One Bitcoin, you don't have to buy. You can buy a part of it. So it's like buying 0.01, 0.001, 0.0001 Bitcoin, something like that. So you can buy in fractions. In stocks, it's not available till now in India particularly, but in US, they are trying to, you can buy US stocks in fractions as of late. So this is a major difference. And the crypto, you have more freedom. You own the coins, you own the money, you own the value, you can store the value. So a lot of pluses are there in crypto. So which is uncomparable if you compare to stock market. So stock market has similarities like trading pattern, all other stuff, but crypto has its own advantage. Like in stocks, you might be dealing with demat account. Here, you will be dealing with wallets, wherein you will be holding your coins, whatever you buy and sell. So these are some of the major differences. But when it comes to trading, it's all the same, across the segments, whether it's crypto, commodity, currency, or stocks, whatever it is, it's all through the price is how retail traders buy and sell. Based on your purchase and your sell, the price moves. So that's how what I'm going to tell you a simple strategy at the end of the session, how to trade cryptos, and which can be used for any market, unlike stocks or commodities, currencies, anything. So when you come into crypto, you will be seeing, looking at the parallels to stock market. So like in stock market, as you have to have a demat account, here you'll be having wallets. You know the digital purse we have, like holding a digital purse. So through wallets, you own the coins. Whatever you buy, you'll be holding it in your wallets. There are popular wallets like MetaMask, Trust Wallet. There are hundreds and thousands of wallets, all open source, free, and you based on different protocols, network protocols it's called. So based on protocols, different networks, you might have to use different wallets. I've just quoted the popular ones like Trust, and MetaMask is most popular because it has multiple networks which can be used within that wallet. So wallet is free. Within wallet, you can buy from any exchange, any person, any centralized exchange or decentralized exchange, any P2P, person to person. There is no restrictions. So you can buy and hold it in your wallets. Your wallets, your money, you are owning it. So it's like unbanking yourself. We don't deal with banks here. We deal with your own coin with your own wallet. So it's like being on your own, all on your own. The major plus or minus in this is the security part. You have to own your own security. Nobody can rescue you if you lose your password, like paraphrases. Normally, these wallets are protected with 12 or 24 phrases, which you need to have within your reach. So if it is known to anyone else, it is like you losing the money, whole money. They can use. So you own your keys, you own your coins. That's a concept in crypto. So you have to be very careful in dealing with wallets. So I'll even tell you, I recommend a piece of software which you can use it to protect your passwords, phrases, whatever the wallet. So wallet is a basic concept. So in this Russian-Ukraine war also, you can see the sanctions are going on. See, people are troubled with sanctions by blocking the transactions. Apple Pay, Google Pay, it's not working in Russia, but people are dealing in cryptos, which is possible, which no organization, institution, or government can block this. Beyond this can be carried on beyond borders, beyond boundaries, so there is no restriction. So it's all works under P2P, peer-to-peer concept. So that's how crypto evolved. So that is where these governments fear about cryptos, because nobody has control, nobody owns anything, and nobody can restrict or ban something like which they do in traditional markets. So this is the plus as well as minus of the crypto. But we see the plus part of it in this type of crisis, like war-like crisis. It's the crypto is the best alternative, which is working on, and it's showing and proving it to the world. Crypto is there to stay, and crypto is the future. So this is one of the best use case, which is being happening live right now. So wallets are a basic part, which when you come into crypto, this is where you need to just start with the wallet. And if you start in a centralized exchange, established exchange, the wallet comes within exchange. So that you just have to have a login, a password. The wallet is called custodial wallet, because you don't own any keywords, which exchange will be owning, which you'll be using it through a normal login and password. So that's called custodial wallet. Non-custodial wallet is which you own on your own, so which is not controlled by anyone else. So these are basically two different wallets. Within that, you have hard wallet, cold wallet. So there are a lot of differences. Hard wallet is like wherein we use in our mobile, any piece of software. And hard wallet is where you use hardwares like pen drives to store your keys or coins, whatever it is. So it is up to you to design which one to best is for you. Because the choice is yours, and choice is available, many choices are available in wallet space. So as of now, so when you start with crypto, the basic part parallel to the stock market is the spot market in crypto. There are literally how many coins, you know? It's like, I'll show you. It's like 18,074 coins as of now. Every day, 8 to 10, 20 coins are being introduced. New projects come up. So it all started with one coin like Bitcoin. Now it has grown after 10, 12 years. It is around 18,074 as of today. So you have so many choices. So if you compare to stocks, it is limited to 2,000, 3,000, 4,000, maximum 5,000 stocks. But coins, and it is even to explode, grow like anything exponentially, there is no limit to it. So, but things will exist or continue to exist only which it's prove itself to be useful for any other purpose, like as a currency or a store of value or as a token. So whatever it is, it has to have a use case for anything to survive. So out of 18,000, we don't know which one will be surviving. So what as a trader we'll be doing is, we don't go to the newest, latest 18,000 coin. We'll be dealing with top 100 coins, 200 coins, 500 coins, 1,000 coins, whatever it is, by market cap. So Bitcoin is by default the leader in this space. Next comes the Ethereum. You know, these are the stable coins. So regular coins are BNB, XRP. So there are hundreds and thousands of coins. Out of this, you can deal with the top 10, the best ones, top 20, 50, 100. So it is up to you to decide on your own. So you have choices. So that is a plus and minus of crypto. So you have n number of choices. So you start with crypto spot. So for that, what you do is you open an account in any centralized exchange or decentralized, because there are two concepts in in crypto. So the total number of exchanges you can see here, it's around 460 exchanges. So 460 exchanges, it's like uncomparable. You know, for stocks in India, we have two major exchanges. But here you have so many exchanges. And out of 460, it doesn't mean all 460 are active. So the top 10 exchanges, 20 exchanges, which they go by huge volume, by standard, and by long time serving crypto space, you can go and trade with the leader of that exchange. So you can do your own research on that, which I don't like to recommend any specific exchange. You can start with any, which you can do your homework by searching what are the top exchanges available, who is the market leader. Just open an account with them. So in India, we have few, but mostly they are into spot market, you know. So you can try in spot first if you're new to crypto. So this is how one should start with crypto. So you begin with spot market. It is like a stocks, buying, holding, and selling it. So it's like an investment, you know. You just start small and do some research and go by your own method of buying. It all works the same like stocks. So you just have to select the top 10, 20, or 50, whatever, the leaders of out of this 18,000, not the whole 18,000. So you can go by the market leaders. So this is how you should start in crypto. So it is similar to stock market. So it's nothing different. And there won't be any quarterly results or like that in crypto space, and because it's not owned by any specific group of company, something like that. It's not backed up by anything. It's all the value given by you and me. People who are buying and selling, they endorse that value. This is the price of this coin. So that's how Bitcoin has proven itself. Other coins has proven itself. So you start with crypto spot as an investor. When you become a trader, you can just move on to futures. So that is also available in crypto. And the most highly traded volume by value or volume, it is futures in crypto space. So the market leaders are like different exchanges are there in US and out of US. So futures is like 20 to 40 times larger than the spot volume. So futures are big, and the price moves just because of futures long and short quantity. You know, the squeeze happens all the day and time and again, pump and dump. It's called like pump and dump. Suddenly the price increases, suddenly the price comes down. So it happens again and again in crypto space. That is how it happens, because in stock market you have expiry. So you have to close a position by the time it approaches the expiry time. In crypto futures, it happens like liquidation, the name of liquidation, you know. So sudden price crash of 10 to 20% will liquidate you. So you have to calculate the risk. You have to do your own risk management. And this is more than spot decision making. In futures, you have to know what the risks involved, the leverage involved, how much you should allocate in your capital. So all those parameters you need to take into account when you're trading in futures. So, but futures is most predominant part in cryptos, you know, like stock futures, same, but without expiry and round the clock. So it's best part to trade in crypto is to do with futures if you are all well into stock trading already. Futures, equity or options, whatever you are well versed, the same thing can be applied in crypto futures. Yes.
I have a question. Is there anything called like lot size in crypto? Means
yeah, that's one more difference, major difference in crypto. There is no lot size. So you can buy in fractions.
Okay, so suppose if I have 5 lakh in spot and I can trade crypto futures based on whatever margin.
Yes, collateral is available. Major currencies like top 10 coins are already available.
And is there opportunities like, but it won't be there as there is no expiry, arbitrage?
Arbitrage earlier was there.
Okay.
Nowadays, it is almost crushed out. There is no arbitration much in cryptos because it's all automated programs. Yeah. So it senses whatever happens in Japan, US, Australia, wherever, it matches the price.
Okay, thanks.
So arbitration as such, it's not there in crypto. Earlier days, it was there. And you know, one exchange, FTX, its owner is a young guy. So he made money. He minted money. He made millions in cryptos just by using the arbitration. But that space is not there now because too much of institutions are into crypto futures, and those programs take care of any arbitration is there, it will be nullified. So you won't get that opportunity nowadays. So crypto futures is a bigger space in crypto where you can make more money, also you can lose more money. So that is the kind of this space. There is a risk more involved, returns more involved. Both are there in crypto futures. So you have to be very careful while dealing in futures, considering the liquidation part. Because if one doesn't understand what is liquidation, so they cannot venture into futures. You should know what is liquidation, when it happens, what is the percentage you should maintain, what is the capital you should deploy, what is the margin concept. All those things you need to study on your own. There is no such thing, it's an open space available. All it's available in any exchange where you are trading, they'll have their rules. So you have to go through the micro details so that you get to understand what is the risk involved, because very high risk involved in crypto futures. Same like it gives you more returns. That's also obvious in crypto futures. As I said, there are two types of exchanges. Centralized exchanges, major exchanges are all centralized exchanges, and decentralized exchange is the major plus part in crypto space. So in this, you don't have to have an account in this decentralized exchange as such. All you need to have is a browser, within that a wallet. You can connect that wallet to any decentralized exchange anytime. With that wallet, you can just buy. It will come to your wallet. You can disconnect from the decentralized exchange. And then when you want to sell in any other decentralized exchange, you can sell. So it is, you are not tying up with any exchange or broker like stock market in crypto. So that is a complete freedom here, where you can go by centralized exchange where they'll do all your KYC stuff. You have to submit your details, own account, and you have to authorize yourself. But in decentralized exchange, nothing like that. So there are two parts. What is the major centralized exchange difference between decentralized exchanges? Centralized exchange will be having all the major coins listed. Decentralized exchanges, we will be having all newcomers, new listings, penny coins, newbies, meme coins. You would have heard about meme coins in crypto. So it's all like a joke, but still joke coins also will be there, available in decentralized exchange. So it's all like a mass adoption, you know, the Doge coin, something you would have heard about. It's all started funny story with a person putting up a dog photo. I would like to create a Doge coin. That became popular. Now it's almost 4th or 5th in market cap. So the adoption. So that is how it's crypto. You cannot expect, you can expect some unexpected things. So those meme coins, joke coins are all popular nowadays in cryptos. The normal people, traditional people, old school people, they don't understand crypto for this simple reason, which was nothing till yesterday. It will be a multi-bagger today. In crypto space, you can see the extraordinary multiplication. Like last year in 2020, almost 20, the whole 4-5 months, the bull run, which never happened in any stock market all these 100 years. In crypto space, it happened in 6 months. It was 10x, 20x, 100x, which is unimaginable in any other trading segments. So crypto had that kind of opportunity. So that happens once in a century, I used to tell our members. So that was kind of a bull run last year, 2020. So that is why cryptos are currently trading sideways, It had a major run for a whole year after this COVID period. And the numbers, I don't think anybody will have. In India or in any other state where I come from, like Tamil Nadu, more people are into crypto. No government has the data. But when you interact with people, even those who are not connected with stock markets, they are in cryptos. They are dealing in decentralized exchange, like PancakeSwap. They know what is wallet. They do some robo trading, algo trading, which is unimaginable in stock market till recent years, because stock market is picking up algo trading, AI, whatever, bot trading, it's all coming up recently. But in crypto space, even newcomers who are totally newbies to trading, who has not even heard about stock market, they are directly into crypto market, like semi-urban villages, wherever the internet is available, mobile is there. People are trading into crypto markets, which is exploded actually in COVID period from 19, 20, 21 till this year 22. It was huge numbers. I guess it's even more than what stock market people are directly into. See, till COVID period, it was just 2.7 crore of demat account in NSDL for all these years. So it doubled, quadrupled after COVID period. But crypto, within 2-3 years, it multiplied 10 times, almost 5 to 10 times. It is huge. So that is the kind of reach among people. So cryptos are there to stay, and just because of our mass adoption. And even in a recent study, countries like Vietnam, Thailand, and Indians are more into crypto. So the number shows like that. So the centralized exchanges are there, like NSE, BSE. There are popular exchanges. Decentralized exchanges are also there, popular exchanges like Uniswap, PancakeSwap. They're all different with different network protocols. It's called Binance Smart Chain Protocol, BSE, or Ethereum protocol. So it deals with different networks. So you have to know what are all these protocols. So if you're dealing with Binance Smart Chain Protocol, you can transfer to any other Binance Smart Chain Protocol with the same protocol network, so that you can exchange mutually. So you have to identify the protocol which you are using it to. And the other alternate space in investment when you come to crypto is, see, initially we were dealing with crypto spot and futures, so which are the basic things when you enter into crypto market. But crypto has many other alternative space also, like DeFi. It's called decentralized finance. Like it's like a bank doing its own business, like lending, earning money of interest, so that you can do it on your own. There are hundreds and thousands of projects available. It's all new. It's totally new in this space from 2020. So it has had a huge space in 2020, 2021, and a lot of pumps and dumps have happened. Many projects have come. Many had made billions actually in DeFi, and DeFi is here to stay for next 10 years. Many people are seeing it big in DeFi. So what is DeFi is, you go buy, invest, hold your coins, stake your coins, you get some interest, returns. See, it will be mind-boggling if compared to our bank rates. If you get for a year like 6 to 8% for your FD, in DeFi you get it in a day or week or month. So it is huge. Do you have any other question? Yeah.
So basically, what is the advantage that means on what principle DeFi is taking our stake and giving us return? That's
Yeah.
As a new investor in crypto, it feels like, is it something Ponzi and our coins will, or whatever?
Yeah, if you see it as a Ponzi, everything is Ponzi.
Yeah, I agree to that.
Yeah.
But still, we have a wallet and that thing. But keeping our wallets with them, are they using it to trade or something like that?
Yeah, I'll tell you. So DeFi, basically, it's like a bank on its own. Like, when you go to bank, you put your money, deposit your money. What bank does is, it uses your money to lend to someone. They get more interest and they pay you less. This is what happens in traditional finance. But in decentralized finance, everything is taken care by the technology called blockchain. So the ownership, there is no trust. You don't have to trust anybody. It's all works trustless basis. So all you have to do is purchase some stable coins, any coins, and you have to stake it. It's called staking. You have to deposit and you have to create liquidity. It's all different use cases are there. So based on your deposit, if you are buying, say, some BNB and staking it, the BNB is wrapped up and you are given some tokens with that DeFi related project. Say some X token. That token you will be having it, and basically the BNB value might increase over the time, which may be a multi-bagger, we don't know. But those staked may get benefit in the name of, it's called, APY. I'll tell you, there are two terms in DeFi, APR and APY. It's called annual percentage returns and annual percentage yield. So the basic difference is like simple interest and compound interest. So APR is like simple interest. So whatever you invest, you have a return of 5%, say, you get the flat 5% in APR. If it is APY, it's reinvested and it gets compounded. So that you're compounded, the magic of compounding. Many people will be quoting the magic of compounding of Warren Buffett quotes, and you can realize this in crypto. The compounding will be so beautiful. You just invest, sit and relax. You can see it live. It will be compounding like a magic. It will be giving you 2x, 5x, 10x. There's no limit. There are projects like that, but still there are projects which can be doomed in the name of hacking or founders going just absconding. So it all happens in this because it's totally new. It almost 2 years old, this industry. So it's evolving. Over the evolve, some major projects will survive, some may go bust, we don't know. So that is the risk you are taking. That is why we tell you again and again, do your own research. You have to do your own. That's why I couldn't recommend any specific DeFi projects as such, because myself don't know which will survive in the long run. So you have to take your own call. But this is a segment available there where you can make huge money in crypto. Once you understand the DeFi projects, once you come to know what is DeFi, basically, there are hundreds, thousands of projects there available in DeFi. The moment the new project is announced, on the listing, first day, many millionaires are made. After a week, it may be dumped. Nobody knows. So it's like a Ponzi scheme one way or the other. But out of hundreds, 10 projects survive. And in the long run, it gives you stable returns, which is beyond your traditional finance banks, whatever returns they give. So when you take that call, that risk, you get extraordinary returns in DeFi. So that is also there. So you have to be very careful in dealing with projects. That is the major part. I can't hear.
Do we have option of choosing APR or APY?
Yeah, both is there. Normally APR is there, but nowadays a lot of DeFi projects are coming with APY, with high APY, so that they encourage you to stay invested, by giving you more returns. So it is also there. So you can go through any decentralized exchange, any DeFi projects. There are just Google search for yield aggregator. So you get a lot of DeFi projects. So of late, rebase coins are there where the basic coins will be rebased when it goes down the price of $1. So there are a lot of new concepts are coming every day. New projects are coming. So all you have to do is a lot of research because this space is totally new, just born, just 2 years old. So many millionaires, billionaires have been made in this space and yet to be made. So huge returns are there in DeFi. So you have to be cautious also in selecting the project. So when you do your homework, I've been into a couple of projects. One has come down 60%. I'm minus 60%. But the other one is 300% returns. So you have to take a call. So it depends on which projects It's like venture capitalists, they go and just invest in funds in 10 different companies. 9 go bust, but one gives them the multi-bagger. So same case. You mimic or duplicate, replicate like a venture capitalist in DeFi space. You have to put in different projects. Some may come, some may be a multi-bagger. Some may go bust. That also happens. So you have to be ready for both. So you have to do your homework best. That is the main thing. So when you do your own research, we mean again and again, go through the main website. Get to know their white paper. So there is something called white paper. When you come to Bitcoin, the first paper, it was telling what Bitcoin is all about, what is the purpose, concept behind it. So that is the Bible of Bitcoin, the white paper. So the same concept is being used across crypto spaces. Any project you go, first thing you can find is that white paper, where they'll give you the clear picture of what is the basic concept of that project, that coin, that tokenomics. So that you have to go in detail. So underlying value, how they create value, you can understand what their real business is, what the future is. So based on that, you have to join their Telegram groups, their Twitter groups, Discord, whatever the public channels are there. You just go through the old messages, how people are reacting to it, what real facts are coming out of those conversations, and then you have to come to a conclusion. That is how do your own research works. So what basically white paper tells is, it gives you the clear picture of that particular project. And then you have to deal with the tokenomics. What those tokens are being given to you will be dealt with. What it can be used, what it can be converted, how you can take back your money. Full cycle you have to learn. How to go in, how to come out. So all these technology things are easy for millennials, those who are born above 2000, it's easy for them. But people older than before born 90s, they are finding it difficult understanding the concept of cryptos, because it's pure mathematical and technological oriented, and you have to understand how this works. So crypto is, once you understood crypto, how it works, the concept evolved, how it's going on, how its future is going to be, you will be in crypto when you understand fully. So that is a major part. And there is one more space like crypto spot, crypto futures, and then this DeFi projects. There is last year it was a huge hit. You would have heard about NFTs everywhere. Amitabh Bachchan coming into NFT, Salman Khan. So you would have heard celebrities also. Basically what is NFT is like you owning a digital ownership. So some image, some art, some property, whatever it is, your ownership is confirmed in the blockchain, so that nobody can claim that is there. Because JPG, PNG files, whatever digital images, anybody can own in this internet age. But the real ownership lies with the original owner whose name is recorded in that blockchain. So this NFT space has picked up like anything. No exchange owners, no crypto people could understand this fully, because the valuation is crazy. Nobody understands why this has been valued at this price, just one JPG. But the real meaning is in the ownership. Who owns it? See, you would have heard about the famous NFT like apes, apes, some ape images, if you are into this space. So those are highly valued. People doesn't understand why people bought or owning with that value, kind of, all in millions of dollars. So you can't justify really, basically. But if you are into an NFT, or if you are an artist, basically, and I know people who are artists, they are coming into this NFT space and they're making huge money. In olden days, it is like people buying antiques, arts. And we don't understand why they are buying arts for that kind of price. That pride in owning that art is what give the value. So the same thing happens in digital space in the name of NFT, non-fungible tokens it's called. They'll give you a token, and OpenSea is a major platform in this. Like this, multiple platforms like crypto, decentralized exchanges, centralized exchange. For NFT also you have platforms. So even in Indian exchanges you can find NFT, and any other standard exchanges, NFTs are available. So it is a thing of a new area where you can explore. And people have made money, but it's all big names, the popular celebrities, they are all in this NFT space because they play with big money. And the new kid in this space is Metaverse. Even the latest last year, Facebook has renamed itself as Meta, the company name. So it shows the future is all in metaverse. What is metaverse? It's all virtual world where you own your real estate, where you own your business, where you own anything, whatever, which is all unimaginable because it's kids like playing video games, they are into cryptos, I think. They create everything virtually and they sell it and they grow it and they value it. And the transfer of price is huge. You can buy a pixel of a globe, pixel of Goa in metaverse, pixel of India in metaverse, pixel of any country you can buy in metaverse. And the popular brands like Samsung, Nike, Adidas, whatever you name it, McDonald's, whoever it is, today also a few names came up. So they are all coming into metaverse. They put up shops there, they sell products there. So it's all shown virtually that you can own that space. So it's even you can buy land, construct a building, you can sell that as a business, as if you're doing in real world, which is totally unimaginable. And in fact, some even couldn't digest how this could all happen. But this is the future. Once you understand things, there are ways to make big money in metaverse. So this is also new space. So when you come into crypto investments, there are so many scopes, alternate investments. So we are going one by one. And most important thing, which is a traditional thing in crypto, is one more segment is mining. So this mining, earlier you should be knowing it is all through hardwares, You have to buy some hardware machines, rigs, and you have to run through all the time with the huge electricity power, something like that. But now, with technology, it is possible to own a mining in cloud. So you don't have to physically buy a machine. You can just buy a space of it, and you can invest in any cloud mining. There are hundreds of companies. I've been in Dubai and seen a mining exhibition, and it was mind-boggling, And I was the only Indian there in Dubai, whole exhibition. Because all foreigners were into this, all Europeans, Americans, because major money is made in mining. Silently, with just an investment of infrastructure. You have to just buy a part of it, and then you have to wait, and you have to break even, and then you make money, minting money continuously. It's like a passive income. But it's all standard thing, There is a physical hardware mining is also still happening, but still, with technology, this cloud mining is also can be done. You can explore this also. And one more mining, liquidity mining is also there, where you buy some coins and you give that, lend that coin for liquidity in exchanges. In different exchanges, you can give it for liquidity. You get the returns as an interest for this lending. So this is also popular, this thing. So many segments we have seen one by one, spot, futures, all these DeFi projects, whatever. This mining is also you can consider. So coming to the traditional regular trading part. So what happens in crypto or any other stock market or commodity, currency, whatever? It is all about market makers move, who pushes the price. So these are the main parameter here in this whole session. People are talking about smart money, institutional money, whatever different names you call it. It is that money which pushes the price in any segment, including crypto. In crypto, it is open and transparent. See, in Indian exchanges, some yogis would have done some behind the scene work. But in crypto, they openly say it. It is done by automated market makers orders. So that the orders are all 24/7. See, even on Saturdays, Sundays, who's trading? It is all machines, bots. So there are hundreds of companies like market making companies. They are huge. No names will be on public. They are all behind the scene. They are the real movers of the price. So they move the price, either pump or dump. Either they push the price up or push the price down. That is where they make money. That is where all retail traders are losing money. So this is where we take an advantage, knowing the market makers move. We trade accordingly. I'll show you on picture how it is happening. So trading life as a whole, it's like a full circle, When you come to trading, when you switch over from different profession, you'll be understanding the full life in trading. Spiritual also comes in. So all philosophies will be coming in. You will come to understand the real life of the whole part of when you become a real trader. So the same can be understood in charts. For that, I have done a statement, what goes up must come down, and what comes down must go up. So this is when I show in charts, you'll know what's really happening. I'll show my chart, which I have it in tradingcandle.com. So this is the site, for charts, trade anywhere in the world. So it covers all markets available in the world. You name any market, including options in India, we have charts for it, and we trade by charts. So that chart is this. So basically, I have loaded the Bitcoin chart. So I'll just show you how these market makers move are being identified, and how we can trade on that. So this is the basic BTC chart. So whatever, it's live trading now at 42,107. So this is the price of Bitcoin. And this is price of Bitcoin futures specifically. So what happens is, I load my charts, I just see whether it's bullish or bearish. So with my proprietary system, it identifies this whole BTC is bullish. Whether US endorses Bitcoin or not, crypto or not, the chart said it's going to go up yesterday, not today. So that is how you interpret charts. Here I'll tell you the market makers move, how it is being done. See, when you identify the different time frames available, and one more difference I didn't tell you earlier between stock market and crypto, you have different time frames also available in crypto. When I was interacting with few members, they were asking whether we can do intraday in crypto. There is no intraday concept in crypto because it works 24/7. You don't have to close within 3:30, 3:20, something like that. There's nothing like that. So all you have to take a call, whether it is bullish or bearish. So if it is bullish, chart says it is bullish, we go buy and sell mode. If the chart says bearish, we go in the reverse mode. So that's how it works. So one simple strategy I just want to share with you, with this audience, is the market makers move. So what happens with market makers move? What happens with price after they push the price or push down the price? See, in this scenario, yesterday, this was a scenario yesterday, and all these white candles, wherever you see the white candles, I mean, somebody can call this as hollow candles. All these pushes are identified as a white candle. So when it is green, we identify that as a bullish, that is pump. When it is pumped up, as I said in a statement, what goes up must come down. What comes down must go up. You can just see it on charts. This has gone up yesterday, day before yesterday. This was the scenario, and it has come down exactly to the level where it raised from. So this is how it works. See, I can mark you the zone from where. See, it is like this area. So this is where it started. And it rallied, and it achieved a target, some target which we worked out, 1:3 ratio. Whatever trading target we mark it on, as an image you can see, it is all 1:3 ratio. So this 1:3 ratio is achieved, and it has been pumped. And after the pump, the dump has happened, exactly to the level where it has started. And after that, the second pump. Today it started. See? So whenever you see the long candle, the pump has already happened. If you are holding a position in Bitcoin, you would have made profit, booked profit, come out, close the position, and wait for the next chance. Either you can be a buyer, long you can go be a bull, buy and sell, or you can go short and sell and buy. So it is up to you. But when you ask me personally, in crypto, I don't short crypto markets for the very simple reason, there is no upper circuit, lower circuit in crypto markets. In stock markets, one more difference, it is there. At least you will be stopped out within a limit. In crypto, 1000% rise is possible, 100% rise is possible. It can happen anytime. So there is no chance of that is coming out when you short. If something goes against, you don't even have an opportunity to come out safely. You have seen nickel, I think, a couple of days before. Some Chinese tycoon has gone bust in billions, lost. So the market works like that. Whoever shorts more, and its short will be squeezed by these automakers move. So they push the price against the short position. If you are going huge long, see the Bitcoin part had happened, all these days after reaching 65, 69,000 targets, So what happened is like everybody was saying to the moon. In the crypto space, you would have heard to the moon, to the moon. So it is going to go like anything. And everybody was saying it will go to 1 lakh. When? It was last year. When everybody was bullish, the price came down 10%, next 10%. Within 20% down, the whole to the moon guys, all got liquidated. So that's how the market behaves. But once it clears that long position, huge long position built up, it again spikes up. See, you can see it in this daily spot, the pump, the dump, again the pump. So it's cyclic. Whenever market makers push the price, either up or down, it comes down to the same level. If it is daily time frame, it takes a week or 10 days, a month. If it is 5 minutes chart, you can go by different time frames of chart. So you can see the holistic picture in this. And it will be more clear even in 2 hours, I'll tell you. See this 2 hours chart. The price has come down. It has been pumped down, dumped down. So after that, it was a full circle. The levels marked with blue lines. So this is where exactly it has hit up as a first target. And it has completed its full circle. That's what I said. Trading life is a full circle. So you can classically check charts, not only for Bitcoin, it can be any coin or any stocks. Whatever stocks you are interested, you can verify, check with that. And you have to see it differently. Who's pushing the price? Who's pumping the price? So that it gets cooled off later. You can check Bank Nifty, any stocks, any cryptocurrencies, commodities. It's all happening same because it's all the institutions doing the market making orders. Works all in the same way. It goes against the crowd, mass psychology. People who build up positions, they all go by YouTube views, mass popular media views. They all go in the same direction, Either they buy holistically 80% of the people or 80% of the people short the market. See, just hearing the war news, people would have gone short. Imagine people going long in war time. It's not normal, right? Because normal human psychology, in bad times, you have to short the market. That's how you have been told. But does market work like that? Does anybody have reason why market went up one day? Why went down one day? Nobody has the reason. The reason is you. It is you who are trading, taking positions. Market reacts exactly opposite to your reactions. Here, you means it is all retail traders. The mass, whoever building up positions short or long, the market goes exactly opposite to that. Just because the market is designed like that, it will go against you. So that is where this positioning size, how much you should take, how much leverage you should make, how much should you invest, that you should calculate. The risk you take is most important in trade. It is not the quantity, because the more quantity you trade, the more loss you have, which you would have just rewind your past trades, you would have realized why your trades gone bust against your trade. Because you would have done huge positions, So that one simple reason will, any trade, forget about crypto, any segment, either it is stock or options or commodity or currencies, whatever. Whatever positions, whenever you take huge, the market reacts exactly opposite to your position. You might be wondering, why just me? It is not just you. What made you to buy or sell is the same reason for others also. If war is the common news being fed to you, the same war news reaches everybody in the same proportion, If it is negative, everybody assumes the same negative news. See, if the results are good, some company giving you good results, but stocks going down on the same day, why? Have you imagined any time why the market reacted exactly opposite to the results? It's all pump and dump game. So it's being automated nowadays. Earlier it was manual, nowadays it's automated, highly automated. So what happens is, whenever retail traders buy, the price goes down. Whenever retail traders sell, the price goes up. It's just simple, just one line sentence, a concept which you should assimilate, you should understand why market reacts exactly opposite to my position. When you trade small, you could remember, you are making money, a little bit money, each and every trade. But when you increase the position, you would have known why the trade has gone wrong. It is just because of you. So taking that cue and lesson and decoding the charts, looking charts in a different view, you can trade. See, what I trade basically is whenever it comes down. See, buy the dip is a simple line which everybody says it very easily. But what is the dip? Which is the dip? Where you should buy? That is where you should take a call. So when the dip happens and it stabilizes, I have a system, my own system called, say, showing this is a downside target. When it's reached, I'll start buying. I wait for this one single pump. So the whole trade completes. This is how I trade. Whenever the dump comes, you can buy. That is how my simple trade is being carried out, even in stocks, when I was trading in stocks, when I was trading in futures, options. Now coming to crypto, the same concept, but the way you look at it and the position size you make it is the most important thing. So any chart you can decode in this way. In fact, it is very easy and simple, but hard to follow, you know. You have to wait and take your call, not trade any time. Whenever market dips, you have to wait for the dip if you are a buyer. If you want to short the market, you have to wait for the pump. Whenever the pump happened, it has to match. That matching happens. Because the market making orders which pushed up the price, it has to come down the price because they have to net the position. They have no other choice. They have to net the position. Why market making orders are doing this is, they don't have the brokerage, you know, the pips difference, whatever the brokerage they doesn't have. They can make money within the difference of next paise. Suppose if in stocks you say, to make you understand, 100 they buy, 105 they sell, they make a break even in 3 paise. So they get 2 paise as a profit. They do millions of trade in a day and they net the position on the same day in stock market. Crypto also the same thing, but as a retail trader, you have extra cost of brokerage. So you can't break even within the next pip difference. So that is where lies the huge difference between retail traders and institutions. The market making orders, they go buy and sell with like a continuous process. They have that money power. They have that huge leverage. They can play with it. They can push the price, bring up the price. They can do everything. But you can't do a single push. You can't even single 5 paise move you can't make in a market. That is the weakness of any retail trader because the money power is less. But these prices, whichever is being pushed, is not being done by any retail trader. You understand? So retail trader cannot push the price. So the market makers who push the price, they have to net the position. So it happens after, it depends on the time frame, you know. If it is 5 minutes chart, the time may be within half an hour, 1 hour, 2 hour. But if it is a 2-hour chart like this, it happens overnight, like 1 day, 2 days, 3 days. So it all depends on the time frame you look at it. And if I want to give you a view on Bitcoin view, you know, because people are most interested in predicting the markets. This system shows you 92,880 in monthly charts. So this is the ultimate target within a chart. And this we have been following it down 4,000. 1,000 to 2,000 travel and 20,000 to 4,000 travel. Every time frame it worked. All targets has been achieved. And the pumps and dumps happen day to day, every minute, every second. I have an automated system where the pumps and dumps gives me alerts, you know. Whenever dumps happens, I get an alert in all time frames so that I can take a call. I can trade those dumps. Pumps, I can book the profit. So this is how I have been designed a simple system to trade, but currently I'm trading only in cryptos. So the same can be deployed across segments, any stocks, any futures, any options. It's all the same. So any queries? It's also time, you know, for other guest, important guest to speak.
Okay, just last question. What resources you recommend to read further about the crypto space?
Yeah, so there are hundreds of resources. The main one thing I can recommend is you go through Binance Academy. There is an app which you can download. There is a website. They have A to Z covered across all crypto titles. You get answer, everything. So beyond charts, you can even refer Bank Nifty, whatever it is. Even that can be decoded, studied. Why market went up today, went down yesterday. Not after happening. I mean to say, before happening, we can easily see the charts, because this print, the footsteps left by the institutions, the smart money, which cannot be erased from the chart. It's all printed. It's the real price traded. Nobody can manipulate this. We are just seeing the price, the pumps and dumps, match it, you make a trade. That's how the trade happens. And in crypto, it happens 24/7. It's more easy also. There is no gap ups, gap downs, remember. Unlike stock markets. Next day, a different play in stock market. Every day, it's a different play in stock market. Crypto, it's continuous, non-stop. So there are huge choices available in crypto, as I listed out. It's not just trading or investment in just crypto coins. There are multiple alternative investments like mining, staking like DeFi's, liquidity providing, so you get interest, which is extraordinary. See, there are APYs, in millions, which is really laughable, but still, it's there. It's kind of, see, there are stable projects, even in Pancake, you go and see just 60%, 80% return per annum is still there. It's all giving you returns, but it is really unimaginable, or people in normal business, they can't understand how come this much return comes up. But it's possible in crypto. So you can start exploring different segments. Trading is just one part of crypto. There are different parts in investment mode, mining and other DeFi projects. So whatever I've said. So each and every segment is an ocean to itself. There are many things to learn every day for you. So there is no stopping of learning in crypto. Every day you learn something new, and something new comes up. You can explore and you can invest, and more of it, you can make money also. And no questions regarding regulations or taxation part, which I'm not expert in that. Other than that, crypto, you can ask any questions.
So for a newcomer who are used to trading in Bank Nifty and Nifty and other things, where do we actually start, sir? Do you have any links, or where exactly we start trading this?
Sir, I am in the market from 98. So 1998, I learned markets by being in market. I myself being a market maker for trading institutions, so I learned many things which normally retail traders cannot have access to it. So that is why I understand institutions better, institution trading better, and I decoded, I made my own system. So this is totally different, which normally you can't take it as it is. So this is also not available. So you have to see the market totally different. It doesn't work like any other technical analysis, like fundamentals. So even in my website, I would have put up, say, trade anywhere in the world, no technicals, no fundamentals. So all just visual trading. Just see the candles. That's why my company is named Black Candle, We go by these black candles. All these black candles are all either accumulation or distribution. So where the buying is happening, where the selling is happening, we just mark it up, and we see the pumps and dumps play within that levels. 80% of it, not 100%. In fact, the system gives you the precise to the decimal point of targets. But still we trade lesser than the original targets. We want to just make in between money, not 100% perfect trade. So we just go by the flow. So you have to know how market works basically. Market works, reacts just to your trade. Either you buy, it goes down. When you sell, it goes up. But how to decide when you buy, when to sell? So the position size, as I said, does matter. When you buy more, that is a dangerous point, So you can't expect the trade to be in your favor when you do it more. Any trade, forget about Nifty or Bank Nifty, any trade you do, more the quantity, more the risk, in the sense against the chances of going against you is huge. And in fact, if you put stop loss, forget the trade. It's all done. So all your stop loss is hit, trade is closed. So that's how the market behaves.
How good it is trading crypto options?
Yeah, in crypto, since it's new and options is being just started, and there is no liquidity or market big in crypto. Options market is not there as such. There is one exchange is there, but still liquidity is the problem.
But I couldn't. Yeah, I could find a lot of huge IV in terms of crypto options.
Yeah,
Implied
that's what
volatility.
I'm telling. There is one exchange, I can name it, derivative exchange. That is the exchange which has options, trading as such. But the problem is liquidity. And the options, as stock market is not matured in crypto, you can't be a seller of option in crypto. Exchange is a seller here, and they don't have a weekly, monthly expiry. It is all 5 minutes, 10 minutes, 1 hour, 2 hour, 24 hours maximum expiry. So the premium is huge for 24 hours. So it doesn't work. So it may get matched to the stock market options kind of market, maybe in coming years, not now. So options not recommended. So anything else? So how many are into crypto already? Anybody already in crypto? Yeah, few answers as such. I see a young person there. So if you want to check Indian market charts also, we can check. So the Nifty March future was bullish. So though I don't trade, this is how the pump and dump works. They are dumped with a cap and they filled that, and that has been happening. So this is a number which is achievable, 16,567, 583, whatever it is. That is where it started its fall. So it's showing the mark of that. So you may be bearish, somebody. The chart says bullish, something like that. So you have to trade accordingly. Even options charts we have, so it's all the same concept. So options charts also the same price action. Whatever comes down goes up, whatever goes up comes down. So don't forget this mantra. What goes up must come down. What comes down must go up. Even the reverse is true. So I do the reverse. What comes down must go up. I do this trade. So I'm a long guy in crypto. So I just do long trades. So DJ was asking the last speaker about Matic. So what Matic will be doing? We can just check the live charts and see it's bullish. Bullish means that with the targets, the 2 hours is currently running, the latest time frame. So this circle will be completed, 1.6426 it's showing. From where it fall down. This complete, whatever you call the cup, handle, all those things are within this. Though we don't call it this as a cup, but still that's a cup. So it's a full circle. So from where it fall down, it reaches the same space. So this is cyclic, comes down, goes up, comes down, goes up. It's a continuous process. And crypto, it's classic. Since it's being done 24/7 all through without any time delay, so it's beautifully done. In fact, it's more automated, so more bots are trading. In fact, we are fighting with bots, we are playing with bots in cryptos. And the precision is more in crypto. So DJ was here. He was asking about the Matic. So we know where Matic is going. So even the numbers are here. All you have to do is just buy and hold and wait and make a profit booking at the numbers it quotes. But it takes its own time, you know. When you go by larger time frame, it takes months, weeks and months. See, in crypto, you have this 3-day time frame, which is not available in stocks. 6 hours, 8 hours, 12 hours. All these time frames are all specialties of crypto space, you know. Since it's a continuous market, these extra time frames which are beautifully giving you the macro level picture. In 8 hours, it's like a 8-hour cycle. There is something called funding fee in crypto futures. So every 8 hours, either buyer or seller has to pay in the name of fees. If the buyers are more, they have to pay the fees to the sellers, the minorities. So something like that. There is no expiry, but still the funding fee is there. In some exchanges it's 8 hours, some exchanges 1 hour, some exchanges every second they have a funding fee. So it all depends on the exchange you deal with. So these are all some new concepts when you come from stock market to crypto market, so which you need to know.
The funding is applicable only for futures trading?
Only futures.
Okay. Can you
The
check
concept is the more majority, if many people are long, they have to pay the minorities, sellers. So that is the concept. Otherwise, you will be holding it for 20 years Bitcoin without any overheads, you know. They keep that overheads on you so that you close your position periodically.
Okay, thank you.
And the leverage is extraordinary. You have it like 125x, which is more dangerous, but still that is there. All you have to do is just check charts, price, play with the price, and if you understand the price better in markets, you are the king. Because since earlier speaker, he was saying, I believe only in price. That is true. You have to just go by the price, where it's heading towards, why it's being pushed down, why it's being pumped up. If you understand that, every market will be very clear for you, including crypto. The last, the one software which I want to tell you is this, the Bitwarden. You would have heard, or somebody would have heard. If you have not heard, if you are not knowing, just go by this. Bitwarden is the wallet, the password manager software, which is open source and free, wherein you can have your organized data, you know. See, I'll show you a sample of this thing. So this is the My Bitwarden software, wherein I have wallets, apps, centralized exchange, coins, cryptos, accounts, multiple accounts we have, DeFi. So if something is DeFi, what are all DeFi projects? Suppose if I want to go by Pancake, I can have its original website where the source code is there, its Instagram page, Telegram page, Twitter space. You just do a click, you get that page, so that you can organize things. So for wallet, you don't have to fear. You can have your the secret passcode also here. So one thing you should remember is that master password. Unless you forget, it will work for you, because even the company cannot recover for you. So it is encrypted, completely encrypted, so that you can use it. So this is one free software which I recommend to organize your data, so that it will be highly useful. In fact, if you have multiple email IDs, multiple brokerages, user ID, password changing every 14 days, everything can be taken care, organized. And I do multiple login in cryptos, multiple account management since we run a company. So it's all possible with this simple software, so which you can make use of for even general purpose. Fine? Shall we finish up? Okay, thank you.